everyone, Chad Troop here, and welcome to my latest edition of Bank It or Tank It. This week we're breaking down the analysis on just one company, that's Asana Incorporated. This is a work project management platform that's really been booming since the pandemic, helping companies organize these projects. That's been kind of more complicated now that people are working from home, they're all over the place. Just makes it easier to keep track of things. So this company was on a nice run higher, then it went through a crash. So today we're going to step back, take a look at the sentiment, take a look at the fundamentals, through the key stats for the company, some quick comps, and of course the price chart to figure out whether or not this stock's going to be on my Bank It list here over the next couple of months, which means we expect it to run higher, or it's on my Tank It list, which means look out below. The stock's set to continue falling lower. So before we get into everything for today, though, I want to make sure that you caught my latest Quick Takes Live. Last week we went live. I hope that you were able to check that out. It's on the True Options Masters channel. And of course, I want you to subscribe to my channel, chat sheet below, scroll below, click subscribe, and be sure to give this video a thumbs up if you like the content. So there will be links back to my Quick Takes Live video also in the description, so that way you can check that out. So be sure to scroll below, read the description as we go through this video, so you can make sure you're getting all the content that we're producing and keeping up with all of our Bank It or Tank It's in our Quick Takes videos. So remember, the key concept behind my Bank It or Tank It videos that I've been doing is every stock that we cover comes from a person like you writing in, letting us know what stock you want us to feature. So this week's stock, Asana, came from Mark. He wrote in a couple of weeks ago, wanted us to take a look at Asana. So it's been on my list and we're finally bringing it back to featuring it now. But if you jump on those Quick Takes Live like we had last week, we ran through several stocks that people were listing right there in the comment box and jumping on them and taking a quick look at them during that live video. So that's what's great about the Quick Takes Live, is that you're going to get those stocks looked at basically right away and just get my quick take on what things are looking like. But you can always leave a comment below, because I add these stocks to my list that I have basically a spreadsheet pulled up with all the stocks that people have mentioned, and I just go through that list and we use them for our Quick Takes videos. I'll use them to kick off my Quick Takes Live videos just to have a couple stocks to feature, and also these Bank It or Tank It videos. We're always going to feature stocks off of that list, stocks that you're interested in. So keep them coming. Leave me a comment below. Let me know what stocks you want me to feature in my next video. So let's dive in today, though. Remember, we're looking at Asana, that's ticker ASAN. And the first thing that we're going to be taking a look at is the key stats. We're going to pull up this chart of the revenues and net income for the stock. So the revenues are the blue bars on the chart. The net income is the line graph on the chart. And you can see the revenues have just steadily climbed, which is something we love to see on the Bank It or Tank It analysis. We can go back, it starts at 2019, starts to steadily climb up to 2020, a nice jump in 2021. And then we have the actual results there for 2022 already in January, as of January 31st, 2022. Another big jump, and the expectations are for that growth to stay steady out in 2023, 2024, and 2025. But what's interesting is that they're calling for a reversal a bit on net profits. We see that the net income's been going lower. They're not getting back to profitability, since that's the line on the chart. The key for that's on the left-hand side over here. And you can see that they are running in the negatives, and that's not changing anytime soon, but they are expecting these declines to slow down, which is great to see, and the revenues are supporting that. And so revenues are a key aspect to watch. I know everybody wants to see profits, wants to see a company get back to profitability, but they can always do things to start to cut costs and start to improve profits down the road. What's great to see is their growth, and the fact that they are still expecting that to continue even after the pandemic is everything that we want to see in this stock. So you gotta love seeing the steady revenue growth for Asana. All right, now let's switch over to some quick comps. Here we're basically just comparing this company to some of its peers in the industry. And I just do a quick input here into our Capital IQ software that we use, which has a ton of fundamental information, a ton of data, and it already pulls up some quick comps that they find that's in its industry or near the industry that's worth basically comparing it to. So we look at market cap, you can see that Asana is relatively even with the rest of the companies on average here. 6 billion market cap, about 4.5 billion as the average. So it's right there in the ballpark, not a massive company, but that means that these are pretty good comparison companies as far as size. When we look at the revenues growth rate over the last 3 years, 70% for Asana. That's what we saw on the chart that we just looked at. Solid growth rate. So that's compounding at 70% per year over the last 3 years. And that's phenomenal to see compared to these other companies. It's definitely in a stronger growing phase. The average here is 29%, which is really solid too. But 70%, they're more than doubling that. So they're definitely a company that's on a run here for growing their revenues. And again, you love to see that, because here on the compound average annual growth rate, there's nothing there because they're not profitable. in fact, when you looked at the chart, they were losing money every year. So they're not profitable. They're not even turning around their net income yet. It's been getting worse and worse. But seeing their revenues grow so much, that's why the expectations are going forward. We're going to start to see that turnaround. So again, revenues here are leading this stock, and they've been kind of the key theme over these first couple of takes that we're looking at. Now, the next thing we wanted to look at was sentiment. Now, this sentiment reading that we pull up on these charts, the same quick comps. You can see price to earnings still not relevant because the earnings are negative, and it's the same for most of their peers. The one that does have an earnings, it's 98 times earnings, which is probably not accurate. It's probably just based on the fluctuation they're seeing in their earnings at this time, so not much to glean from that. Now, short interest, this gives you an idea of how bearish the market is on it. Higher short interest, unless you're a company like GameStop, is usually a bad sign because it means people are making more bets for the stock to go down. You don't typically see these short squeezes happen too often. If they do, it's nothing like the GameStop move. So that's why we have it here as a sentiment reading, whereas high short interest means that the investors are bearish. Lower short interest means that they're pretty bullish on the stock, or at least afraid to short it. So 8.9%, they're higher than the mean. So out of these other companies, investors are still willing to short Asana compared to some of their competitors. Now, Coupa Software is another company, 9.9%. The only one on here that's above where Asana is. So that kind of tells you something about the perspective here of the stock from the investment world. They seem a little bearish, at least the way they're trading it, because the next section is their average broker recommendation. They have a 2 out of a scale from 1 to 5, with a 1 being a strong buy and a 5 being a strong sell. So they're an outperform rating right now at a 2. So that's pretty solid. The analysts are not rating it that bad, but we see investors taking shots to the downside. Now, normally here, we'd flip over and take a look at some unusual options activity. There's just nothing coming up yet on our radar. Even after this drop, we're not seeing the unusual activity. It doesn't mean that people are not buying the stock and trading it. It just means that it's not being flagged as unusual on the stock just yet. So we don't have that sentiment reading. Now, one of the last things that we want to look at, and the most important to me, is going to be the price chart. So sitting here zoomed out, going back to where Asana basically became public back. This was in 2020, so they were trying to capitalize on what we saw from the pandemic, and investors were hot on the stock then, had some pullback, but it started to bounce, trade sideways, and then ripped higher. This is a massive run here in 2021 for the stock, more than tripling in value, then pulling back through a massive crash. I mean, this drop on the stock here as well is what? A 75% drop. 75% drop here in just a matter of months. I mean, these are bear markets. This is a bear market for the stock, and this is the time when investors are fearful in the stock. It's time to get greedy. This is blood in the streets. This is that time, and I've been writing about it here for basically weeks now, probably months, about these stocks that have just been absolutely hammered with quality businesses. This is a great company that offers a product that businesses need and want. Now, can they do it at a cost-effective method? Can they continue to grow their sales and find a way to make profitabilities over time? That's all what's up in the air. But at the end of the day, this is a quality company doing some really solid things on the top end for their financials, seeing their revenues grow, and investors have just been crushing the stock. So now, and this is something I wanted to talk about today, is the relative rotation graph, or the profit radar, as I like to call it. And that has shades on the chart, because right now it's red on the chart. That means that it's lagging the market. And when it's lagging in the market, when it's down here in this quadrant, a lot of people look at it as bearish, but it typically means that you can expect a bounce, at least a rally higher. It's up over 7% today. Today's Wednesday, the day that I'm recording this, so it's seeing a nice push higher today, which is not featured on this chart. You can see it's really just going to be a blip on the radar. It's not a big move for the stock. When we're talking about opportunities from the stock being in this section on my profit radar, we're talking about big 20 to 50% runs here over a matter of weeks. And we've seen it before where it's in lagging, shoots higher, falls into the lagging quadrant, and then we get a nice run higher. So it's been prone to seeing these kinds of moves to the upside. So in the very short term, this is a Bankit stock. This is a stock you want to look to at least run higher, make a run here up. I don't know if it can get up and test this kind of key resistance area in the couple of weeks that we have coming up. But I mean, that would be one heck of a run. The problem is that to the downside, this is very sharp drops that it's seeing, very steep slope support level here as it continues to fall. So here's what we're going to do with this stock, because it's got this steep slope, it's got the short-term bullishness. When you look back on the chart, the lows, even since it became public, is around $20 a share. So it's above 30 right now. Here's how I would like to trade the stock. Right now, we're going to have it on our banker list. We're going to be bullish on Asana, where it's sitting at today. Even after the big move that we're seeing here in the middle of the week, we're still bullish, and I'm going to stay bullish as long as it stays above $30 a share. So that's my floor for the stock, is $30 a share, because I know if it falls below that, it can quickly lose another third of its value. It can fall down to $20 a share there in pretty much no time. And that could not be a floor for the stock either. It could continue falling from there. So we're not saying that $20 is a new floor. I'm saying right now, for being bullish, $30 is the key level that I'm going to watch. I'll be bullish today, and you can jump in as long as it stays above $30. You're going to want to ride this thing to the upside, because it's creating this megaphone type pattern, this falling channel here, but it's got a wide pattern that it can trade in. It can make a big run higher, and that creates a lot of opportunities. It creates a lot of bullish moves, and if it were to eventually break out, that would be even better. But I mean, I'm not calling for a massive breakout from here, but it's on my Bankit list, looking for it to do a steady climb here over the next couple of months from where it's trading at today. So that's all for my quick Bankit or Tankit today. Again, if you enjoyed it, give me a thumbs up, click the like button below to let me know, and be sure to leave me a comment. Let me know what stocks you want me to feature in an upcoming Bankit or Tankit video. And as always, don't forget to subscribe. That's the easiest way to keep up with all of our content. Subscribe to my YouTube channel, subscribe to True Options Masters YouTube channel, so that way you can see all of my quick takes lives, all of our monthly market outlooks that I do with me, Chris Cimarelli, and Michael Carr. So those are some great content, great videos that we do that I just want to make sure that you're not missing out on. So be sure to check that out. And until next time, I'm Chad Shue.